Hello and welcome back to our channel. Today we are going to understand how operators pump and dump stocks and make retail investors fall prey to this manipulation. Our focus would be on how to save ourselves from this manipulation. Here is a quick video on the pump and dump process and how it is executed.
A pump and dump scheme involves fraudsters boosting the price of a stock by making false or misleading recommendations about its value. The perpetrators already own stock in the company and sell their positions after their scheme leads to a higher share price. A pump and dump is illegal, and the perpetrators of this fraud can face hefty fines if caught. The internet has created more avenues to defraud investors. These schemes usually target micro and small cap stocks because these companies tend to be the easiest to manipulate. For example, Bob's Energy Gum is a successful small cap company. During the first IPO, Parker and Tim buy a lot of the stock and convince several investors that the company has potential for serious growth. The stock's share price soars. However, the company's fundamentals show that the company is overvalued, but this information is hard to find because it's a small cap stock. Parker and Tim sell off or dump their stock in Bob's Energy Gum, just as a bunch of investors buy shares in the company. The price drops, and the new investors experience massive losses. Meanwhile, Parker and Tim enjoy impressive profits.
Now, who is a stock operator? A stock operator or operators are a group of people. They can be a firm, broker, or promoter or shareholder and work as a syndicate to manipulate the stock price. Steps of an operator activity. The number one step is to accumulate the stock. Step 2 is to establish credibility. Step 3 is to create FOMO. Step 4 is to offload the stock. And step 5, hide the activity. So let's understand each of these steps in detail and let's take a stock X. Let's take the initial price of the stock as rupees 10. Now the promoters slowly over a period accumulate the stock and at times sell off their holdings to create panic so that they can completely own the stock. The stock price at this time does not move much since there is no liquidity, and since it is unknown, retail thinks it as penny or junk stock. So there would be a question in the back of our minds as to why do these operators buy large quantities in an unknown stock gradually? This is to suck liquidity and create an artificial imbalance of supply. Also, if anyone wants to buy this stock, no one would be able to buy it due to inadequate liquidity. After this, the operators do nothing on the stock so as not to draw much attention. There is no activity week after week and they enjoy their vacations. After a long time, the operators move to the next step, that is establish credibility. What they do is to spread some rumors about some news of orders or something exciting that catch the eye of the public so that people can now track the stock. Now, there will be demand for the stock, but operators already hold a huge proportion. What they do is to place large buy orders which cannot be fulfilled since the supply is not there, and automatically the share hits upper circuit and constantly grows in value. This creates a sense of credibility amongst public that the business is doing good and there is something big happening. Once this credibility is established, people will trust the source without a hitch and start thinking of buying the stock. Now, this is when they move on to the next step of the grand execution by creating FOMO. They do so by exploiting the greed factor in people. Now that they have established credibility, they spread rumors in social media like Twitter, Facebook, YouTube, Instagram, and propagate false information that the stock might reach X level targets and promote the stock. After this, news is spread to millions of people, and these operators delete their fake accounts. One of the important focus points in all of these promotions is to create a sense of urgency by spreading news that the company has received orders from multinational companies, state government, or central government, and it would be the last chance for anyone to capitalize on the huge growth potential. Ironically, some influencers are also involved in creating this FOMO by which retailers get trapped very easily. By seeing these promotions, some lucky or unlucky ones buy these stocks and when they are in profit, propagate it to their friends and family. It becomes like a race to the finish line, and everyone feels that people are making money and they are the ones on the sidelines and not making money. This makes the stock grow from 10 to 100 to 1000, but people still feel that there is still scope. Now comes the last step of this mega manipulation. When people become desperate to buy the stock while the stock hits upper circuit, and then slowly operators start selling off their stake and ultimately exit their entire stake, thereby raking millions while the retail buys at exorbitant valuations and gets stuck at higher prices with huge quantity of this junk. Now, this causes a situation wherein there is too much of supply, and when retail sells their stake, the stock starts entering into lower circuits. This means that the stock enters into a free fall, and large chunk of holding is with retail, and there is nobody to buy them. The last step is to hide the activity. Now, as in the accumulation phase, these operators, through their syndicate networks, create separate entities and buy through them and less than 1% stake, since they would need to report to the regulator in case the shareholding crosses 1%. So smartly they buy gradually and then sell gradually so that there is no such evidence in the shareholding pattern nor it comes into the eyes of the regulator. These activities are very hard to spot by a normal retailer. Hence, a word of caution would be to thoroughly check the financials and shareholding patterns of penny or small companies and deter from buying them until there is valid evidence of the company turning tables. Operators target small cap or penny stocks which are not on everyone's radar. Since these stocks are easy to manipulate, to spot anomalies, we would suggest looking at the profit and loss statement and look at the sales or revenue and profits of the entities along with shareholding pattern and shareholder uh, pledging. This analysis should give us reasons whether to invest or avoid such stocks. So, hope this has been informative. Until then, thanks for watching.